Hi, so 99% of traders and investors think they are diversified, but most of you are dead wrong. And I would like to show you how you can test that so it saves you basically decades worth of losses. And in this video, I'm going to show you 3 tests that you can do to check whether your portfolio would actually be protected during, for example, market crashes where correlations normally spike. So you've got Google, Amazon, Meta, Nvidia, you name it, all of these tech companies in your portfolio. And then it might be kind of easy to see, okay, this is not a very diversified portfolio. And we saw that during the, for example, 2022 crash, when these stocks basically all in unison dropped. However, there's also less obvious correlations that basically would only reveal themselves during a crash that you should check for. So test number 1, and this is a very easy one, is basically, and this mostly applies to long-term holdings, of course, not necessarily short-term trading, but take your, let's say, top 5 holdings and get their charts over the last X period that you want to test, for example, last month, the last year, last 5 years, and get that for all of your top 5 investments, and then overlay them and look how they basically track against each other. So for example, if they all in unison moved up and down and up and down, then you don't have 5 different investments, you have one investment with 5 different names. It's basically like having 5 different flavors of gum, but in the end it's all just gum. You know, you should have a balanced diet, and that's why you should do this test. Okay, and the next test is also very easy, test number 2, and this basically only applies if you have been investing for years, because go back to the last time there was a market crash, for example 2022, 2020, or even before that, and look at your portfolio. Okay, look at all your different holdings from the time. How did they move, so to speak, against each other, and identify any patterns? Because you know, if they all in unison did the exact same movements, again, it's not a diversified portfolio. Then you have like all of your eggs in the same basket, basically. All right, and test number 3 is also another quite easy one, and this is basically add up your exposure in different sectors. So this is of course mostly about stocks, but you can also take together, for example, crypto coins you're invested in and count that as crypto, the industry, and basically look how much exposure you have to different industries. If 60% or something of your holdings are in tech, I've got bad news for you. But if, for example, no industry or field has more than 20-25%, unless it's a very conscious decision by you, then, you know, good job. Okay, and if you did all of these 3 tests, then congratulations, I commend you. And let me know down below what your results were, because if you, let's say, failed even one of these tests, your portfolio is not diversified, it's actually quite concentrated, and you should probably look at it again. And, you know, let's also talk about trading, because this was mostly about investing up until now. And with trading, it's a bit different in my opinion, because it's less about asset diversification, more about strategy diversification. So if you're a trader, you should diversify also in terms of strategies, because, you know, during certain regimes, one strategy might, you know, give you a big loss, while another actually gives you a big profit. And of course, you don't want correlated strategies. So in that sense, you can also be either have a concentrated portfolio of strategies or a diversified portfolio of strategies for trading. And that was it basically for today. Drop your thoughts down below. Let me know if you failed any of these tests. And otherwise, thank you so much for watching. Hit the like button, smash the subscribe button and the bell, and thank you so much for watching.